to bolster the Indian startup ecosystem, boost the entrepreneurial spirit, and to support innovation, I propose to abolish the so-called angel tax for all classes of investors.
The Indian startup ecosystem has heaved a sigh of relief that the dreaded angel tax has been removed and are calling the proposed abolition of the decade-old tax regime as a huge reform. Before we tell you why, let's understand what is angel tax. First introduced in 2012 by then Finance Minister Pranab Mukherjee, Section 56(2)(7)(b) of the Income Tax Act, known as angel tax, is applicable on any amount received by a privately held company against sale of its shares at a price higher than its fair market value. The differential amount was treated as income and was taxed at a rate of around 30%. Now, please note, angel tax was levied on startups, not its investors. So the rule was applied when a closely held company, such as a startup, issues shares at a valuation higher than the fair market value. Tax authorities treated a startup's excess amount as income from other sources and levied a tax of about 30%. While the government claimed it to be an anti-abuse provision to prevent money laundering and round-tripping, contesting the levy, investors have maintained that they usually invest at a higher valuation considering the future potential of a startup, and the tax notices to their portfolio companies hinder their ease of doing business. Earlier, the tax applied only to money raised by startups from Indian investors and funds not registered as alternative investment funds. The Union Budget 2023 expanded its ambit to include foreign investors, sparking concerns among venture capital funds registered abroad. Subsequently, the Central Board of Direct Taxes, or CBDT, issued a circular exempting investors such as sovereign wealth funds and pension funds from 21 countries, including the US, UK and France, from the levy of angel tax for non-resident investment in unlisted Indian startups. However, the list excluded investment from countries like Singapore, Netherlands and Mauritius, which account for the heavy inflows into Indian startups. Venture capital investors registered in the unexempted countries called the move counterproductive, as foreign funding accounts for 75% of investments in Indian startups. Remember, the angel tax was not on income but on investments and actually reduced foreign direct investment into India and also created a system where people domicile themselves outside the country. So as a result, a genuinely good idea was not getting supported in India, and it was forcing people to flee abroad and get their money. Startup industry leaders have long argued that it placed an undue financial and compliance burden on young ventures and deterred the growth of genuine risk capital for the fast-growing industry. The abolition of the angel tax in the 2024 budget is a landmark decision that is expected to have a profound impact on India's startup landscape. The provisions through which angel tax is imposed will cease to be enforced with effect from April 1, 2025, as per the Finance Bill. The decision will help in attracting foreign investment, promoting innovation, and further strengthening the Indian startup ecosystem, the third largest in the world.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.